guys? My name is Chris. This is Wheelhouse Trading, and welcome to the Wheelhouse. All right, so we had a crazy day yesterday in the market, huh? Woke up early in the morning, got in the Discord, told everybody, look, if these indexes are coming down, you guys need to be on that SDAO, that SQQQ, and that SPXU. I jumped in on that as well as some like triple leverage bears, hit it hot and heavy, stacked quite a bit of chips, and then it started to fade and I sold them all, and I waited all day patiently, all day thinking, okay, it's going to come up in the middle of the day and then it's going to drop at the end of the day, and I waited and I waited and I waited, and it did drop. It started to drop. And I actually pulled the trigger on 2 trades, put stop losses on those suckers, and got faked out. I got tricked. And I still was profitable on the day, but I did not like that. It hasn't sat well with me all night. I had to go watch about 4 episodes of Ozarks and make dinner, and I was a little irritated because they weren't huge losses, but the thing is they're particular stocks that I want to run up and down, and now I have a wash on them, and they're both like $600 losses, which isn't much, but I got tricked, man. That market was crazy. I mean, there was what was it, like Tesla was down, I don't even know, let's just look. It was crazy, right? Tesla was down like, okay, it went all the way down to 851 and as high as 933. That's an $82 swing, okay? The freaking Dow Jones was down like 1,100 points at one point. It was down to 33,150 and ended up somehow at 34,420. Okay, I'm going to tell you something about the stock market. Okay, there has been times in the past where there has been, 9% days on the NASDAQ, 10% days, even 13 and 14% days. I'm not even kidding, on the indexes in one day. But what you got to know is they are usually surrounded by red days before and after. So heed some caution. I've been hearing all day, are we at the bottom? Did we hit the bottom in crypto? Did we hit the bottom in stocks, Chris? I mean, I don't know, but I mean, my gut tells me I don't think so. There's just too much going on with like the geopolitical environment. Why did it jump up so much if we have, tensions, at the Russian and Ukraine border? We have the Fed meeting coming up on Wednesday. Like, why did it jump? Well, from my understanding, what happened, guys, is a ton of hedge funds covered their shorts yesterday. Remember, like when it's super bloody out there and the VIX is really high, that's pretty much when you want to get out of your shorts. And to have that kind of momentum jump out of nowhere, like a Jack in the Box on steroids, and then bang, he just jumped out of the box. Like, yeah, that was hedge funds covering shorts. They were buying it all up and they were covering their shorts. Now, does that mean that we're at the bottom? I don't know, but the charts still look filthy. I mean, filthy, like they need to get in the bath, or better yet, stay outside and let me hose you down because you are filthy. Like all the charts are dirty. They need to get cleaned up real bad. Meanwhile, so while I'm looking at all these charts, first thing that I have to say is that I just think that Bitcoin controls everything. I literally think it controls everything. I think they've gone in, they've set all the algorithms to Bitcoin. You can have 30 screens, 30 charts going on your screen, and you get, they're all on the minutes, and you get one green candle on Bitcoin. Just one green candle on the minute. And everything on the stock market gets the one green candle at the same time. Suspicious. Okay? Bitcoin controls everything at this point. So now at this point, I just have Bitcoin in front of me and I just have everything else as like stocks. And I'm just like, oh, I didn't know that Bitcoin had anything to do with, that healthcare company. But no, apparently it does, because Bitcoin controls everything. Okay, it's crazy how the algorithms are set to Bitcoin right now. It is insane. I don't know if anybody else is noticing that, but it used to be where the algos were set to Bitcoin within the crypto space, but now it's like throughout the stock market. It's wild, man. All right, so as I'm looking at all these algos and waiting to go fishing and waiting for the right spots and trying to get my conditions met, and I'm looking at a ton of stuff, and I'm sitting here for like 3 hours, literally, because I was done trading earlier in the morning. I mean, I started, pre-market, which I normally don't buy until after 30 minutes of the market being open, but it just looked like it was time to put my foot on the gas, and I was hitting all those triple leverages early, and I was right. And I showed the guys I made a grip of money, like a lot of money. But it all started to fade at the same time, and I just closed them all out. And I didn't really trade for hours, like 3 hours, and I just watched charts. Maybe even 4 hours. It was a while. And I just watched and watched and watched. I didn't even know if I was going to get into a trade. I wish I didn't get into a trade at the end of the day. But yeah, I don't know. I mean, all the indexes are showing a lot of weakness. And like I kind of explained to you guys before, this is the daily and this is the Dow. Okay, just starting a red ribbon, you're in the red cloud. That kind of velocity coming down, these are momentum candles, is pretty significant. All indicators are bearish. You're under the 200. The Dow doesn't go under the 200 very often, guys. Last time it went under the 200 was in a major accumulation phase, which was a crash, which was COVID. Okay, last time I had this situation where it went under the 200 red cloud, red ribbon was here. See, even here when it came down, it didn't have the red ribbon. Okay, so, and like I teach you, the accumulation phase goes up and then down, and then it flattens out when it's good. Well, this one's still going up and flattening out. So at the top it flattens, and at the bottom it flattens. Then it usually comes down and then has to flatten. I pray that doesn't happen, because I love it when the market goes. And the market will always go up. You just have to wait for the phases to like do what they do. Here's something I wanted to tell you guys. As far as like bottoms and tops and are we at the bottom yet? Here's the thing. First of all, nobody really knows. Okay. Second of all, bottoms and tops are processes. In fact, I'm going to give you just a quick little tidbit of history lessons. Well, no, I'm not going to get all deep with it, but I'll just tell you. Typically, when there's a bottom, it can take 45 days on average for it to make the first leg. How do I explain this to you? Okay, right here. See this double bottom? Okay. Now, I don't know what the days are here, but I know what the average is, the stat. And this, when people say, oh, are we at a bottom? And like they are today, as an example. Let's just say they're saying that right now. And honestly, let's see if this look at that. That is interesting, isn't it? Okay, that goes across. So, people might think this is the bottom. Well, it's a process, okay? It takes time and reestablishes before it makes the rally, and there's that follow-through day, and then the higher highs, and on we go. So it's a process for a market to top. In fact, some markets have taken a year to a year and a half to just top in the distribution phase. It's true. And from and also at the bottom can take a while. It's not quite as long, from my understanding. I think it's like 6 months is a long time, like from the time it hits the bottom to getting up. But when you see these on a bottom, a double bottom like this, it's usually like from here to the first blue candles is about a month and a half. Okay, and they usually will take, like it's pretty common to see a 3, 4, even a 5 month, but maybe like 3 and 4 months. That's fairly normal. I mean, go look at the Nasdaq back in 2015 and 16. That thing was like it was like up, crater, up, or sideways, crater, up, crater. Like, I mean, it was like relentless. Like, it was just pain in the butt, So yeah, so I mean, look, I don't know that it's over. Nothing on the charts are telling me it's over. I just think that a bunch of hedge funds covered their shorts and we got a rally. which could have really stung like a guy like me that's in and out. Like, luckily, I'm good at what I do. Like, I'm even the guys in the Discord, they're like, "You told me to buy this." I'm like, "Yeah, I told you to buy that when the index has come down. Did you notice how I took mine off?" You gotta put them on, then you gotta take them off. Okay, let me give you a simple way to do this. Like, right now, you could go into your brokerage if you have. Well, no, it's too late for after. It's too late for after hours. But let's say you had after hours. You could simply go buy yourself 1,000 shares of UDOW and 1,000 shares of SDOW. UDOW means the Dow's going up. SDOW means the Dow's going down. You don't know what's going to happen tomorrow. So when you wake up in the morning, let's say the Dow is up. Great. Pull off the SDOW and let it run. The Dow starts coming down. Put SDOW on and pull off UDOW. It's called hedging. Okay, now you're pivoting, but you're putting a hedge on there, a blocker. That's one way you can do it. Currency pairs, hedging. You got to think of things in doubles. Like, if you want to buy UPS to go down, buy FedEx to go up. Just use the same dollar amount, and then if one's going down, pull off the one that goes up and put it all on the one that goes down, and it just boom. I mean, you have to. It's like driving or flying a spaceship or a plane or driving a boat or whatever. You got a couple gears. You got to hit the throttle a little. You got to back off. So you got to tap the brakes. You got to hit the gas. Might have to turn a little bit, pivot. Like, you got to feel the flow. You got to get the rhythm. You got to dance with it. And when you get that rhythm, those guys saw me. They saw me hit it. I posted what I made in the morning. It was a lot, and probably my best day of the entire year. And I cleaned that up before, like, probably before 9 a.m. Call it 9:30. So maybe the market was open for 3 hours. That's probably my biggest day this year. And then I didn't get to trade all day because I couldn't get a setup right. I couldn't get it right. It was driving me nuts. It'd be like, everything I was looking for was this kind of thing. Let me see if I can okay, here's an example. I don't like it. I like to have certain rules. I'm very rules-based. I'm a rules-based trader. That's what I am, because I know that if I don't follow the rules that keep me in line, that keep me in check, then I'm liable to lose more money than I could be losing if I was using a couple simple rules and conditions. One of my rules is, if you're going to trade the minutes, you got to be above this purple line and you got to have a blue ribbon. So if it's a blue ribbon and it's approaching the purple line, look at this thing moving right here. Where's this Bitcoin? Look at it go. Okay, so like, if it's a blue ribbon and it's under the purple, I don't want it. You know what I mean? Like, I don't want it because I know that these things can get rejected off of this all the time. And if I'm going in the red and I'm going short, I don't want the red above the purple. I want it below. That's all I'm asking for. I'm putting a little VWAP wouldn't be bad too. Like, you pull that up. By the way, if you guys haven't watched that Ozarks, you got it. I mean, I've been into that since the first season. I was just up there watching it with my girl. But what am I looking for? VWAP? Yeah. So, all right, what's going on here? All right, so that's kind of my third rule. Like, I want to make sure I'm above this middle line, this VWAP. Above the purple, in a ribbon. Right here we're flirting with the upper end of VWAP. So this could get like dirty. And then what I like to do is I like to trail it. Okay. So like, once it gets moving, I'll pull it over here. I'll pull the stop over here. Okay, right now I want to let it breathe because crypto you can get stopped really easy and it's extremely frustrating. In fact, even sorry, I'm gonna take my slippers off. Even stocks, like I was so irritated. I God man, and you know what kills me about these two trades I took? I took them right. I took them perfect, and they would have both paid me fat. But you know what I did? I used a stop loss. I was shorting. They were both shorts, and I used a buy stop. And I called it perfect. My conditions were right, and lo and behold, it just wicked up, stopped me out, and then it went on, and it would have made me thousands of dollars on each of those trades. I was correct about it, but the stop got me. That's why when crypto, like I don't even like having the stop anywhere near it. I'd rather be like live. I'd rather be like fast, just like sell, cover, whatever, reverse, whatever I got to do. But yeah, so I can do that. Like I can be fast about it. I don't need the stop. The stop is really just for like that what if scenario, I see how it's getting rejected on the upper VWAP down 1200, 1250. But what I'm saying is like you gotta normally you gotta trust this ribbon, right? Because this ribbon shows trend and it's so good in this volatile market on the 1 minute. Normally it's good on the daily or the weekly, the daily, the 4 hour, the 1 hour. Great. No, not in this market. Trust me. It's just not. Like we'll get back to that. We'll get back to the can slam and the swings and like all the good stuff. Like we'll get there. This isn't the market for it. This is the market that you just like read more books or you stay out or you're a savage ninja rooftop killer like me and you just get all your screens going and you run it. But like today, I know not to force a trade, not to overtrade. Just stay out of trades if they're not making sense. Yeah, I got wicked out on 2 of them, but I still took the trades right. It's so freaking like algorithmic and erratic. And, I'm talking about something that I put the buy stop, 50 cents over the high of the day, which was like several dollars from where it even was. And it still launched up and then failed and came way down another like $8, and I would have hit it perfect. That's how erratic this market is, and that's why I can't do my normal trading style. But what works great is trusting this ribbon and being above this and this VWAP line and this when the cloud is blue. So you have all 4 of those going for you. Now we'll sit here for a minute. See, now we're 700 better, still backwards, but we'll sit here for a minute and we'll see. We'll see if the blue ribbon will hold. And these candles, by the way, are nasty looking candles. I don't like. Okay, when you have a big momentum up like this and then it gets pushed down, that's bears pushing you down. This candle is a monster. Bulls were winning for sure, but still quite the wick, right? Same thing here, and then a doji, little indecision. And then they try to push down. So obviously there's some fighters, but the bulls had more dough, basically. This right here, that's a weird one. That's like if that was the other way, that would actually look like an evening star. But see how this one's kind of was up and got pushed down? It's kind of like a hammer candle. Now it's still developing, so you couldn't really say that. But you just got to let these things play out in the trend. You got to have patience. You got to just put the tunes on. You got to have the energy drink. You got to just chill out, and you got to be patient because sometimes, my people, you can come over here to something like a 1 hour. You might just hit that blue ribbon above here and go, these are all hours, every one of these candles. Every one of these candles is hours, okay? And you just buy in here at 781, and you sell over in here at 1196 on the 1 hour, just trusting those 2 conditions. Yeah, that's what I'm saying. And all you're doing is dealing with the market volatility in the market environment and backing it down. I don't know why that's doing that. And backing it down to, there we go. And you're just backing it down to the 1 minute in this kind of market environment. You're just doing that. So if you're doing crypto, like you can do the same hedging thing if you're using a VPN and using like Bybit or Femex or one of these ones out of the country, and you could just do perpetual contracts. Just don't buy spot, like the actual physical like coin, crypto. Buy the perpetuals, and then you can hedge. You can buy like, 1 or 2 Bitcoin to go long, 1 or 2 Bitcoin to go short, and then you can just pull off the hedge, let it rally, and then when it dips, put the hedge back on and pull. You know what I mean? You can do it that way, or if you're fast like me, you could just write it up, write it down. You can go ribbon to ribbon. I don't do that. I enter on the ribbon, I sell on the cloud, and I do that on all time frames. It's the way to maximize your profit. You know what I mean? Because you have your entry rules that are like, if you entered on the cloud, you make more money, but you don't have the safety. And I like the safety. And I actually don't even like getting until I'm above here. So what I do is, if it's a blue ribbon and it's above here, I'll let it come all the way down and come back up like I just did, catch these candles, and we'll see what happens. Even though it looks grim, like, oh, Chris, you're down $1,800. Dude, this is like all day, every day. Look, if I make 100 grand in a day and I win 7 times and I leave with 70 grand, that means that I threw 30 grand in the trash. You guys realize that, right? I'm throwing 30 G's in the trash like every day, right? That's just like the cost of doing business, baby. It's like Vinny down the road that you got to give the envelope. Got to pay for protection. You got a partner. You got to pay the tax man. Whatever. See? Trust that blue ribbon. And there she goes. It looked like it was going to go, and that's what's called a fake out. And there's those liquidity wicks to scare you out. You just got to trust it. I'm still down. I'm down a little less. But see, that's what I'm saying. The whole thing is about the trend, okay? And it's about trusting it and not freaking out. Because remember, us as humans, we're our own worst enemies when we trade. We're the ones that screw things up. Believe me, we are. Now, it's going to be interesting right here if we get rejected off the upper end of the VWAP, which could happen, and then that's going to just suck. Also, not always the best thing to do when you're, in a downtrend on the daily, a downtrend on the 4-hour, although we were getting a little bit of momentum, but not enough. Downtrend on the 1-hour, but getting better. 30-minute under the 200. So yeah, I mean, when you have overall downtrends on the bigger time frames, it's not that smart like for me to, go long on the 1 minute. It's better when everything's coming down on those, and then you wait for it to go blue, and then right when it turns red, you snap it because that's your best price, and then you come down. And then if it's all blue on the big time frames, you just snap it when it goes red to blue, and you ride it up because you're getting the best price going long. So we'll see what happens here. We'll see. But I do like that the 1 hour on Bitcoin is almost at a blue ribbon. And it's just like that other video I told you guys about. Like, this is the deal, guys. This has to be blue. And it's critical that we get above this line and this one. Okay? We get above those, we're in a whole, like, we're now we're making moves, So I heard a funny joke today. It was about our president. It was a meme, actually, and it said, which one did he clean out first? The shelves at the store, the embassies, or the stock market? I was like, oh. For me, it seems like the stock market. But, yeah. All right. No, this is what I do. I just go fishing. Just see what happens, and might have to hang out here for a little while if you want. If not, you guys can go. I'll probably just see what happens. Oh man. Sometimes you're gonna not make it, guys, especially when you're having lower probability and odds, when you have downward pressure on the bigger time frames and you're in an overall downtrend trying to go long. But I hit Bitcoin several times doing that, many times actually, and been successful too. So let's see. Now, when it gets that little red down there, I usually like to abort. And notice how these liquidity wicks will come and kick you off the 9 right here, even though it's on the minute, and this is the 20, and look how the wicks will come down. A lot of times they'll come and get the wicks, pull the liquidity, the market makers, and then it'll spring up. It's just the way it happens, you know. But remember what I said about using those hedges and just pulling one off and then throwing it down on the other to maximize. So if like the index is coming down, you got both on there. And I do it with all kinds of stuff. I do it in the real estate sector. I do it in everything. I do it all the time when I'm unsure. But really, it's just to have on there so that I know which direction it's going, and it's not going to mess my portfolio up too much. Then once I know the direction, see what I'm saying? See how it'll come down and touch the 20, and then boom, it'll shoot a candle. It's super common, guys. Like, this is like how it goes. Remember I showed you how breakouts with the volume and the base, and we were doing it live, and it was like 1,200, 1,400, 1,600, 1,700, 1,800 right in front of you guys. A couple of videos back, same thing. It seems to be getting rejected off this this VWAP, which is going to end up probably being a fail. We'll see. The thing with Bitcoin is the best thing to do is just buy it and hold it. Honestly, it's like trading it is such a pain in the ass, dude. It's better to trade stocks, to be honest. Like crypto, it's fun, and you can do it, but buying it and holding it is like great. Like you don't have to, dance on razor blades and, try to avoid landmines and booby traps and bear traps and all this other stuff, when you can just buy it and hold it. And the prices are good right now, 36,000 for a Bitcoin. Like, sure, it might come down further, but you could snap a little bit up and you could hodl that, You know what I can't stand about making these YouTube videos? And I don't know, maybe another YouTuber can like make it in the comment section and like hook me up and like tell me like what the deal is. I think I know what the deal is. I think it's my computer. I have an iMac, 27-inch, really good one for like when it was made, which was 2015 or 16. But what I don't like about this whole YouTube video thing is I like doing the talking and teaching, but what I don't like at all is how long it takes to render and transcode. Yeah, this is getting dirty. It's almost down $3,000. I don't like that. It just takes forever. And then if you want to edit cool stuff in, it can take you like 8 hours to make like a 40-minute video. It's ridiculous. Like it must be my computer or something, but that is so time consuming. Otherwise I just drop like 2-3 videos a day for you, like boom, boom, boom. It'd be no problem, but it just takes forever. It drives me nuts. It's like, oh, do I want to go down there for like 5 hours to make a 30-minute video and do that every day? It's a lot, Well, I guess I can let you know how this one went tomorrow, but it doesn't look like it's going to be too good. And I probably would slide that stop up here where it gets wicked. Now, here's another thing. If I were to slide the stop up to the bottom of the ribbon right here, a lot of times it'll come and get you, and then it'll bounce because they love it in crypto to get those liquidity wicks and just wipe you out and take your Bitcoin. That's why I don't like it. That's why I don't even like a stop on there. Like, I'd rather just be like, boop, get out. But see how it came perfectly down right there? It's never good when this is forming the red cloud below it. But I can't tell you how many times I stayed in and trusted the blue ribbon, and it literally got out of all the little weak hands and then launched up to make me money. I can't even tell you how many times. I also have had just probably as many times when I could have got out here and then I lost more money and it turned into a red ribbon. So, but look, you probably could have got out right here and saved yourself all this money, but the ribbon stayed blue, didn't it? And it's still trending up. Same thing with here. Same thing with here. This is a big one, and this could be another one, and then it could. Notice how the candles are getting smaller. So the next one, I'll tell you what, it looks to me like there's about 3 more purple candles coming. They're all going to get smaller and make a hockey stick, and then you're going to get a blue doji, and then a little short fat doji kid that's trying to steal your cookies, and then oh yeah, that's the bulls pushing right there. Look at that, pushing up. Who loves you, baby? Gotta trust those blue ribbons. Blue cheese on the rib eye. That's another reason why having a market buy and a market sell is not the worst thing when you're trying to execute quickly. You know, I had it set to limits because I do that a lot, but I didn't change the settings when I got on here. Look at that, just swung like $1,000, and like just in this tiny little bit from this one to this one was $1,000 swing. Now, if it just prints a couple blue candles and it can get past that top line, be off to the races, you know. And I might end up just sitting here for hours, you know, just whatever, read a book or, you know. But I don't know that we're at the bottom. Oh, I know what I want to talk to you guys about. A plan. Okay. Remember how I was telling you guys the last time the minutes came, I didn't even watch it. I just had a plan. If everything went bearish, I was going to short specific stocks, and everything went bullish, I was going to long specific stocks. And I used the sectors to my advantage, and I used the triples, and I hit it a specific way. Well, that's what I want you guys to do on Wednesday. I want you to have a plan. Like me lately, I'm just in cash at the end of every night. So when that day comes, depending on how it goes, it's going to be extreme. That I can tell you. I can almost pretty much guarantee you that because I've been through enough of these. It'll be extreme up or extreme down. It's not going to be flat because the market is erratic when J-Pal talks. It's just erratic. Okay, so you can count on that. You can count on volatility. So what you should do is you should have a watch list of shorts and a watch list of longs. It's probably best if you're going to be shorting to have a lot of conditions like red ribbon, under the 200 on the daily. Hey, we're profitable. Hey, got to trust those blue ribbons sometimes. Could have got shaking out, could have got faking out. All right, so now maybe we need to put that little stop on there just to protect, right? All right, so sell, stop. Okay, as an example, you just throw that sucker in. And we'll keep it down here. We'll keep it down here just for now. But as a fail-safe, right? So let's let it run. And yeah, so have like your if you're going short, like make sure you're in a downtrend on the daily, red cloud, red ribbon, under the 200. Then spice it up a little bit by, you know, maybe like what has really high PE still. Okay, that hasn't really hit like, you know, is down to like a 14 PE or something like that. Stuff that's still at 58 or 37 PE. Okay, also pay attention to sectors. Kind of put all that in your mind for your plan. Same thing with the longs. Okay, be ready for that. If it's going green and there's momentum, you want to be able to pull the trigger on. You want to deploy cash. Boom, 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 longs. Okay, and then just buy, set your stop low, buy, set your stop low, buy, set your stop, boom, boom, boom. Get a bunch of screens, and if it goes the other way, it goes down, then you want to be able to do the same thing. Then you want to just trade, you know, do trade management. Trade, you can't walk away, you can't like, you know, do all that. You gotta have trade management and just manage the trades, and you'll probably be in and out pretty quick. You can make a lot of money in like 1 hour. You know, you can make a lot of money if you just have a plan and you execute the plan with the guaranteed volatility that the market will have, because it will be extreme. It always is. And use it to your advantage. Use algo trading to your advantage. Basically, like, instead of like worrying about all this stuff, like figure out a solution to use it to your advantage. That's what I do. You know how I talk, like, how I don't really like pay attention too much to the news. I know what's going on, of course. I read news and I listen to news all day. I always have stuff on right here, this TV, but I don't get consumed by it. And the reason why, and I've never told you this, but the reason why is honestly because I can get my news from the charts. If something's going on Bloomberg, it's going to show up in the charts, or it's going to show up in the sector, or it's going to show up in the industry group. Okay? And I know the stuff that I teach you is above the news. It's beyond the news. I try to teach you about market phases and tops and bottoms. Why do I teach you that instead of talk about the news every day? And that's cool. There's awesome channels that tell you about that stuff, and I will from time to time too. But the reason I tell you about the way markets work is because I know that back in the early 60s, there was a catalyst that caused a crash. There was the Bay of Pigs. There was the Cuban Missile Crisis. There was, in 72, the oil embargo from OPEC, in 61, there was John F. Kennedy going after the steel companies. At the same time, Robert Kennedy went after the investigation for the stock market. In 69, you had the Fed tightening, policy, monetary policy like they are now. Then you had in 81, you had 4 interest rate hikes, which caused a massive decline, until 82, which started a secular bull run. And what I'm getting at is I can go through, the run on the banks in 29, and I can go through, credit default swaps, and I can go through a million reasons that you'll see on TV. But honestly, it doesn't matter, because every time that there's a top, there's specific things to look for that you don't have to hear, you can see. Okay? Shaolin warrior style, baby. Yoda, slaying Sith lords, eating them for dinner. Yeah, we eat them. Okay, so if you know how to identify all the things I teach you about, all these different indicators like at tops and to go into recessions, and you understand the economy and you understand the bottoms, like you don't need the news, because you already know everything works in phases and cycles and acceleration cycles and pendulums to hopium and euphoria to fear, and I'm throwing in the towel to actual market phases, and how industry groups and sectors rotate. And if you understand that, then you'll just know that if there's a top, there is always a catalyst. It might be a Cuban Missile Crisis. It might be Vietnam War. It might be the Fed fund rate changing. It might be an oil embargo. It might be, algorithmic trading that went haywire and sold too much. I mean, there's all kinds of things that have happened in the history of the stock market, and all of it has news that'll be reported, because that's what the news is. They report the news. But if you get consumed by it, you can freak out and panic sell or make a bad decision. And if you just understand how to look at the charts and understand, you should understand the economy, because the economy and how the economy, the trick to understanding the stock market is to understand the economy. And that's why it's good to understand like all the different reports, whether it's a home builder report, manufacturing reports, CPI reports, PPI reports, taking a look at like what's going on in like commodities, GDP, like a lot of different stuff like that is very, very important. Hey, look, we're up 1,000 now. So yeah, it's good to understand all that stuff, but you can get all the news from the chart, and it doesn't matter what it really doesn't matter what the catalyst is, because there's always going to be a catalyst. Okay, there's always going to be a catalyst. So all right, so here's an example how you could do this. So you could just come over here and you could trail it on the minute, on the 50. If you're going to do that, I like to be a little below the blue, because those liquidity wicks. If you're up a lot and you're like going to go to bed and you're like, screw it, then you could roll this up to the 20. You can roll it up to the 9. I don't want to be up by the 9 too long, because it can just whip me down. But I like to just trail it, basically, And so what I'll do is I can have it visually here, and then as I move it, I just get the number right here, and I can come over to my computer and I hit change on the stop of whatever it is, and I just type it in, submit. That's it. And then I just change it. So every few minutes, I just come up here and move it, change it. Simple, real fast, real easy. Just, the thing is just trusting the blue ribbon, understanding the market environment, and understanding the odds and probability of success. And, that's it. Well, I mean, you can let this thing run for as long as you want, but you don't have to. So it's up $1,000, $1,300. So you just close the position, take your dough, call it a day. Oops. And who loves you, baby? Welcome to the wheelhouse.